You're listening to the Reinvest Podcast, where each Tuesday we will show you how to reclaim, reconnect, and refocus your life by bringing you the top real estate professionals in the industry. We'll pull back the curtain so you can implement these tools and tactics to build generational wealth. Your hosts, Garrett Gatton and Seth Ciminillo. Welcome, Reinvest listeners, to episode 50 of the Reinvest Podcast, where Seth and I get to pull back the curtain on how to maximize your life through the power of real estate investing.
I'm like Oz, you know what I mean? The Wizard of Oz. Pull back the curtain, it's us.
It's just
But we're
us.
Not a farce, so we're not
true.
like Oz. So
This is
strike
legit.
that from the record.
Now, there's some good stuff happening right now in real estate. We're kind of personally, we just closed a mobile home park. By the time this drops, it would have been a couple months ago. So we're kind of in the throes of learning how to do management for that and reposition that. And for now, we actually get to kind of taste and see what everybody's been talking about with the mobile home hype. So
Yeah.
talk to us in 6 months, and we might come out with an episode of like mobile home get crashed and burned. No, I'm just kidding. It's gonna be good. It's gonna be good, but. You got to get in there. You got to get in and get your hands dirty.
Well, today we have a great guest. We have Travis with us. Travis, how you doing?
Doing good. How are you guys doing?
So you're Texas guy from the Lone Star State.
That is correct. Right in the middle of it.
So were
Waco,
you
Texas.
raised in Texas?
Yeah, I've lived in, I would say I'm from like a town out in the oil patch of Texas. Basically, it's the last town you go through when you're heading west, and then you'll end up in New Mexico. So yeah.
Oh, wow. So you're there. What's crazy about Texas is it's unfathomable how long you can drive. It's such a massive state.
Yeah, it's like 890 miles from like Shreveport to El Paso, I think. Maybe a little off on that, but yeah, it's bigger than most of the Northeast combined. So.
Yeah, we've talked about this before with people who have been on the podcast from Texas, but I always kind of feel a little bristly around guys from Texas because you think you're better than us.
They are better than us.
We are, definitely. Bigger city, bigger Texas, bigger property taxes, you know.
Everything's bigger. We won't go any further with that. But Travis, tell us a little bit about your company, Balcomie Capital. Give us some context of who you are and what you do.
Yes, we are a boutique investment firm. We take high net worth individuals' money and deploy it into self-storage facilities through a syndication model.
Awesome.
Nice.
Awesome. So how did you, I guess, get established in that niche of high net worth individuals? Did you come from a corporate background and you were in touch with these individuals already, or?
No, I before we started buying in 2020, we started buying storage facilities just because we were tired of the ups and downs of the residential space, making money on a few, thinking we'll make 100K, ended up losing 100K, just real painful. Plate spinning hamster wheel of a business. And so I was looking for something a lot more stable, a lot more, in a way, professional, and just in a sense that like could take my dreams of where my net worth and what my purpose in life would be and actually really pursue that. With houses, I just felt like no matter what, I cannot take a vacation. I can't take a break off this pedal, or I can't ease up off the gas pedal. And sometimes the steering wheel would, proverbially the steering wheel would fall off, that sort of thing. So I was just tired of the hyper stress that was like really wreaking havoc on my body and my family. And I was like, we're gonna figure out what the safest asset is that you can hardly not lose at.
Right.
You can definitely buy something wrong in self-storage and get your butt handed to you, but generally speaking, if you underwrite it well, it's going to perform in the way that you underwrote it, as long as there's no sort of catastrophic events in the marketplace.
Right. And that's good. I mean, and that's kind of a good segue. Before we jump into, I want to hear kind of your origin story, maybe to how you got into the commercial real estate side of things and starting residential. But, you've been over $55 million in assets under management through acquisition, development, reposition, disposition. So, I mean, you've been doing it long enough since you started back in 2012. So you've been at this for over a decade now.
Sure. Yeah, that number is a little off. So that's $55 million worth of residential that we bought before we decided to stop buying. And then we have close to $60 million in our portfolio right now of self-storage and a real small amount of, buy and hold, long-term hold residential real estate in key spots of our city that if we sell it now, we'll lose out on the potential awesomeness that will happen. And so,
right. So let's start kind of at the beginning. What got you even interested in real estate investing in the first place?
Yeah, I was graduating college and I was getting married, and I was like, man, like I've listened to Dave Ramsey, and he says I need to save this much for this. I need to save this much for my IRA. I need to save this much for my kids' tuition that don't even exist yet. And I'm like, dude, this is like freaking $2,500. I just got a job offer making $2,800
right
a month. Like, how is this even going to happen? And so that's when I'm like, there's got to be a way. There's got to be, I'd see all these houses in the college town that we lived in. There was all these houses going up. And like guys my age are building them. I'm like, there's got to be a way to make more money than just like what this is. And so I started reading real estate investing books, specifically on how to flip, how to hold. I didn't know what wholesaling was at the time, but I don't even think there was books back in 2008 on wholesaling. There could have been. I didn't know where they were at. But I ended up reading about 53 books. I ended up reading exactly 53 books, not about, and then I went and took that corporate job, and it was as hellish as you would imagine someone who's an entrepreneur taking a cube farm job would have been. And man, that didn't last long at all. It lasted about 4 months, and I bounced around. It was in the middle of the financial crisis, so there wasn't a lot of opportunities.
Right.
Slowly, I ended up going, we get like $2,500 in the bank. If I go broke,
wow,
I just lose $2,500. And so that's when I, sat my wife down at the table and we're like, hey, I'm going to buy this foreclosure, and I got this bank, and this guy's going to help me, and I'm going to put this money down, and then I'm going to renovate it, and we're going to rent it out and see how it goes. And so of course she had a panic attack, and I was like, just trust me. If it doesn't work, I'll never ask again to do it. And so
I will sell myself on BioLife and use my plasma money to get us back on this, like I'll do whatever I have to if it doesn't work out.
But yeah, I remember telling my wife at the dinner or at our table, I'm like, look, we get $2,500 in the bank. If we run out of that, it's only $2,500. I'm sure I can make it back. It's not a lot to lose. And so that's when I ended up buying a house, and because of the name I dropped at the bank gave me 100% financing for the purchase and the renovation.
Now, hold up. What do you mean you dropped a name at the bank? Like, so, hey, my granddad is Rockefeller. Like,
right. Well, it wasn't in that. So the gentleman, I had lunch with the guy before I got the house under contract. His name was Chip. Now he's super famous. And he goes, hey, just go over and talk to this guy.
Hold on.
Chip as in?
Chip
Gaines.
You had lunch with Chip Gaines.
That's cool.
Yeah. Well, before he was famous, he was a very available human being. It was a good buddy of mine.
How did you wait? You knew Chip before he was famous?
Yeah, most people and most business owners in Waco did, just because it's a town of 90,000 people. Wow. There's very few people in the real estate space, and so crazy. So I mentioned, I go, hey, Chip told me to come talk to you guys, and he goes, yeah, hey, normally we need this much down. What can you put down? And I was like $5,000 in my head. I'm like, I don't know where I'm going to get that, and I think the banker saw that in my face. And he just helped me out, and 100% financing on a bank, on a bank owned property. And so,
wow.
And I'm just, as an aside, I'm super thankful for them. I don't want to name drop just to say, hey, I know them, sure. But I'm very thankful for his input in my life. I will say that. And so, I bought that house.
Real quick on that. I'm sorry, just to pause. I think it's cool. I hope to be that type of person that I'm the same, whether it was your humble beginnings or you're big. It's like you operate the same level. You treat people the same way. So it's cool to hear that he's just an approachable guy, a normal dude. Sometimes we kind of spin this narrative in our mind about people's success, and we forget that there were ingredients that everybody had. There's the same ingredients that people use to get successful. Sure. Nobody's exempt from that. But
yeah, and his books mention just how hard it was for them before the TV show. Wow. I don't know how many books they have now, but I think it's a good amount. But yeah, they're very open with the struggle, and it was true. And when I had lunch with them, it was very evident. So, wow. But that's changed now. I don't know how much they're worth. And
you're like, I think
they're one of the largest employers of Waco. So
that's wild.
But yeah, I ended up I paid $40,000 for that house, put 12 into it. That was I was painting. I was putting the toilets in. I was trying to figure out how to put a back door on, because the person I got foreclosed on ripped the back door off. And and so I had a rent sign up, and before I was even done with the renovation, I had rented it out. And like I said, my wife was having a panic attack when I was telling her what I was gonna do. She I just overheard. It's talking to her mom. She was like, yeah, he rented it out before before the mortgage is due, like they paid for the mortgage, And so, like the typical,
it's
like
working.
It was starting to like
it did exactly what he said it was going to do. And so like, so she was like, you got to go buy a couple more.
Oh, she pushed you into a couple more after.
Super excited
really?
about that.
Wow.
And so,
so how many of those did you do?
That was my original story. We ended up we got really good at buying houses. We were able to raise a lot of money. A lot of my, my investors for the syndication stuff and storage came from like hard money lending, like just like, hey, do you have $100K to invest here? I'll pay 12%, 3 points, etc. And yeah, we got really big. We ended up buying 400 houses in 5 years.
Whoa, that's okay. I know we're here to talk about self-storage, and we will get into that, but you don't buy 400 houses in 5 years if you don't have like a system in place to do it. So like, how did you manage that many transactions?
2012 to 2017?
2018.
2012
to 2018.
Cool.
I guess it was 6 years, 6.5, or 5.5. Yeah, so we definitely had we in 2015 we bought into a franchise that gave us a lot of, I wouldn't say the franchisor gave us a lot of systems, but the franchisees collaborated together, and we were able to get a lot. Like I figured out how to market well, so that like well, what's my cost to buy, which is a super common thing. Like I didn't know what that is. I'm like, well, I'm just throwing all this money out here and buying this many houses. Like, oh well, it's $1,000 a house. And like all the other franchises were like, that's substantially lower than our market. So I just started like, all right, well, I'm gonna full RPM it and start doing. And we ended up, I think we got up to like 20 grand a month in marketing, and we were buying anywhere from 8 to 10 houses through that channel. Then we were buying 2 or 3 houses at the foreclosure auction. Then we were buying 2 to 3 houses at the through like auction websites and stuff like that.
So did you have subcontractors that were working?
Yeah, we had 5 crews, of which I would never hire again. Maybe one of them. But like, because the rough thing about house flipping is you can't hire the best. You can't hire the guy that's gonna show up every day.
Yeah,
you have to hire the guy that's like in between. I'm a complete alcoholic and I know how to put lumber together.
That is so brutally honest and so true.
Well,
we see that in our
I got a lot of
too.
experience.
Yeah.
And that right there was the reason why, like one of the main reasons, like I just don't want to do this. I don't want to figure out where if Ian's gonna show up today, or if Dave's gonna show up today, or if Pablo's gonna show up. Like, I just don't want to mess with this. If I'm gonna,
I don't care what happened on your weekend and why you didn't show up to the job site on Monday or Tuesday. I just need you to show up.
Yeah, right. Or sorry that you had to go to truancy court for your daughter. Like that's not my problem. What is my problem is finishing this house.
Right.
So that was like a very common. Like you had to be just so cold and sober and direct with these people, and I just didn't like it.
Yeah,
it got super burned out. I'm like, I don't want to smell another foreclosure. I don't want to, order supplies from Home Depot Pro Market or whatever it's called, Pro Extra, which is a pain in the neck. And you think they would have one of the most smoothest purchases systems, ever. Yeah. But yeah, I can go like years and years and hours and hours of complaining. So.
Yeah. So you did that. You scaled that business. You decided this isn't really the business I want to be in because of all the things you just kind of said. You got burnout on it. It's taxing. How did you discover self-storage? I mean, what was the aha moment? Like, man, self-storage is a really good option. And for one, there's no toilets. So, I mean, that's pretty good. But how'd you discover self-storage?
Yeah. So in 2017, I was at a mastermind and a guy was talking about how great it was. At the time, I'm like, this guy's a loser. We're like cranking out the cash. We are literally printing money, $50,000-$60,000 net profit months. Like if it wasn't $30,000 net profit, I was angry. Like we're wasting time here, guys. What are we doing this? I was just so frustrated. And as 2017 ended, in February of 2018, we lost over $100,000 in 1 month. And I'm like, I have a problem and I don't know what it is.
Wow. You did, because things were moving so fast and so big, you couldn't get a pulse on why you'd lost that money.
Dude, I felt like I was taking data from 6 weeks ago trying to make sense of it. Now I'm like, I don't know what's going on. So we'd fire this dude. The acquisition agent was paying too much. He wasn't following our protocol. We'll get rid of that guy. We'll get rid of this assistant. The transaction coordinator's not doing her job. The disposition manager doesn't know what a disposition is. It's all this stuff that we had to like unwind. And it ended up being just me and the guy I started. It was me as a founder. My first hire was a guy named Jack, and it ended up just being me and Jack by October 2018. I'm like, I'm done. I don't want to do this anymore. I'm so burned out.
Wow. So talk about the burnout. I mean, so your wife at that time, was she still like, get a couple more, or was it? No,
I think she was like, I don't know if I can live with my husband in the stress he's under type thing.
Yeah.
It is hard, man. Like when, we are whole beings, we're whole people, right? So we obviously focus on business, but really every business has a why. And our why, typically if you have a family, at some point they are a part of that why. And sometimes when business works against that priority, it gets tough, right? So those constraints and those things cause you to start to look at the loser in the mastermind and say, maybe there's something that he sees that I don't.
Yeah. Fascinating thing. I'm still good friends with him. And like when things started falling apart in 2018, I reached out to him. I'm like, can you tell me more about this model? Because this sounds like a model. Because I just remember him saying stuff like, well, 40-year default rate is the lowest of any asset class. I'm like, well, I've defaulted on, not defaulted on loans, but I've lost money on houses, and that's painful. And so like, tell me more about this default rate. Tell me more about building a facility for $35 a square foot. All of this stuff started intriguing me. And I'm like, and as we just couldn't, felt like the February loss, we felt like we were getting traction. And then Jack, who was running my company, he was like, hey, we need 150 grand to make it 6 weeks. And like 6 weeks, like that's like that's down the street. So I was like, we have 40 houses under renovation. Can we sell one of those? Like we couldn't sell them. We couldn't sell any of our rental. It was just a pain in the neck, man. It was painful process. But I think it's important to talk about those things because when you mentioned the why, like I didn't have my why. My why was proving to other people that I was better than them and I could build a better business and I had better things going than they did because I just felt slighted by them. I didn't feel, a lot of it was insecurity on my own regard.
Right.
And so when I was like, fine, I want to build something that allows me to have my why. Well, what is my why? What do I want to do? And that's when I started really looking into it. And that's when I was like, I need something that makes money every day, every week, or every month. And that's the only thing I want to invest in. So like Ray Dalio principles, like our principle still as a company is if we're going to buy something, it makes money every day, every week, or every month. And every time we strayed away from that, my stress level skyrocketed, it's just not, it didn't work. And so
Travis, why do you think that people get sucked into anything other than the fundamentals that you just described? Because like what you said makes total sense.
Ego. I'm better than you and I'm going to prove it. I wanted to be the largest house flipper in Texas. I wanted to be the largest house flipper at any mastermind I went to. The thing about what I just said is exactly what I used to tell people. But the reality is I want to be the happiest and wealthiest person out there. I want to be the happiest dude and the most laid back and not worrying about any money or anything because I got money in the bank account. And I have things closing that are going to be great. I want to have very little people work for me because I don't do good with employees. If I'm going to build a company that has employees, I'll hire a CFO that's an integrator that really knows how to really manage people because I don't. I want to mountain bike. I want to look at deals. I want to talk. Right. Those are the three things I like to do that get me excited.
So it's interesting. You had to almost kind of learn that about yourself through trial and fire. You're able to repivot then to the self-storage. Talk about your first acquisition, and you said some of the hard money lenders were your first investors in the self-storage.
Yeah, they were. So when things fell apart in the housing business in 2018, I wasn't able. The bank was able to. I was able to make monthly payments on the bank, but I wasn't able to make monthly payments with the hard money lenders. But I called them. I'm like, this is what we're gonna do. I can't pay you monthly, but I'm good for it. I'm gonna finish these houses, and I want you to get paid your principal back and your back interest. And if you want to charge me a late fee, that's totally fine. I'm gonna get your money back, and that's my goal right now. And I want a little bit to feed my family. And that was pretty much the only goal at that point. It was just to purge everything, to get everything out there and then restart. So because I did that, pretty much everyone was willing to lend me money because they were like, Travis went through a really hard time. He should have filed bankruptcy. Most people should have filed bankruptcy in my situation. He chose not to. And now like he's out of it and we're going to give him money. And so our first deal that we bought was a portfolio of 5 facilities in a small town in Texas. And, a lot of the
small town in Texas,
deal,
you don't hear those things very often.
Small town. Just like what, like 950 small towns in Texas, so if not more than that. It was $2 million, basically $2.1 million for 5 facilities, about 50,000 square feet. And it was an old man. He just wanted to retire, and he was very nice. He knew exactly what he wanted, and he wasn't going to budge from what he wanted, but he was patient, and he was kind, and he wasn't a jerk at all. when I go to that town, occasionally we have lunch because I just cared about him so much. Like, I
Wow.
mean, like he just meant a lot for me because it was like a new thing for me. It was a new asset class. It was a new beginning.
He gave you a
And
chance.
so yeah, we bought it. It was making $200,000 annual revenue. Within 10 months, we got it up to 360.
Whoa.
Wow.
And,
Wow.
and just by really working it, adding certain things,
Like to the NOI or just gross income?
that's gross revenue. The cool thing about storage, which is different than like multifamily, is if it costs you $100,000 to run the facility at $200,000 in revenue, it costs you $100,000 to run the facility at $360,000 of revenue. So we doubled the value in 10 months, which isn't typical. And so that was a great deal. And we still own that house or own that property. The manager is incredible. She manages some of the smaller stuff we have remotely. And the only reason I buy like the 40 unit, the 50 units, that sort of thing is because I know she can manage it. And so like I don't have to like put a person inside. Typically a 50 unit facility would be too small, but because she can run it remotely and we have cameras and what's like basically a fractional facilities manager, we can run all that. So it's real great.
So let me ask you this question. We've hit on self-storage before, kind of in the last probably 3 to 5 years. The buzzwords have been alternative commercial real estate. So you got car washes and self-storage, mobile homes, laundromats, right?
Oh, yeah.
And kind of these untapped, unconsolidated asset classes, a lot of mom and pop owners. So I have a hard time wrapping my head around self-storage because the barrier to entry is pretty low. Anybody can build a self-storage facility in a field or somewhere, right? So answer the question, is self-storage oversaturated?
To answer that question, I would say potentially in some markets, and in other markets it's not. So if you have a storage facility, let's just say point A, the market for that facility is 5 miles away, or is a 5 mile diameter, basically. Like, so right in the middle, 5 miles away from that is going to be your target market. So depending on where you're at, you might have a location that's really hard to build. Like we ended up selling it, but we had a facility in North Austin that you could not build storage facilities except in this little tiny 6 acres that we bought because it was because the zoning was kind of skewed and the city worked with us, and it took 2 years to get it to the point where we could do permits.
Wow.
So so in that market, no, because everything is, there's 12 competitors in that target market. All of them are 91 to 98% full. So there's plenty of room to add. You got to also take into account that people are going to move into that area, and that's going to create more demand for storage. You also have to take into account that apartments will be built, businesses will come into that area. So one of the most popular one of the most beneficial underwriting pieces in storage is a increasing of a population. So if there's a negative population, we're not going to buy it. Some of the best deals are negative population. You're like, man, that's an 8 cap. Well, there's a reason it's an 8 cap. So you're not going to take that $2 million facility and make it $4 million. The way it's structured, you'll probably end up having it worth about as much as you paid for it. And so,
wow.
So yes and no. Where people go wrong is they don't look at that metric. They look at they're like, oh yeah, well, I don't know what, dude, some of this, like Waco, for instance, way overbuilt. There's over 500,000 square feet getting added. I'm like, where are these people going to be moving in? I actually, before this interview, I was looking at a deal in a small town outside of Waco. I'm like, gosh, this is nothing. Like we just can't make anything work.
So it sounds like it's really localized,
very localized
to markets then.
Very localized, and it's also a retail asset. People don't say that a lot, but it really is. The ones that do the best.
What do you mean by that?
The ones that do the best have the ads. They're marketing really well. They're sending the direct mail. They have the flyer in the back of the local baseball fields.
So
outfield.
It's not like if you build it, they will come mentality.
Definitely not. In fact, if you build it and you don't market it, they probably won't come. It'll take a very long time. Whereas if you market well, you can get 10, 11, 12 tenants a month come in. If you don't market it, you're looking at 0 to 1. We have a facility that we learned the hard way on that. We're like, there's so much demand in this market. 6 months in, we had put 16 tenants in 6 months. So that's failure right there. And so
Wow.
the last 3 months, we've gone from 50% occupancy to like 75% occupancy because we're putting like 10 people in a month as opposed to like 0 or 1. Because not only are you putting people in, people are also moving out because it's a month-to-month lease. And so if you're not constantly putting people in, you're going to eventually have a slow drain of occupancy, slow drain of revenue.
Interesting. So it's almost like an impulse thing, right? Kind of like from a renter standpoint, we do a lot of residential real estate, a lot of multifamily stuff, and renters they'll be on their phone and they'll be on apartments.com and they'll reach out to a landlord. And if they don't get back with them, they're on to the next one. And by the time they've called you, they've probably already canvassed maybe 15 different apartment inquiries, right? Until they find somebody who's going to kind of respond to their immediacy. So and being front of mind is important.
Yeah, we run ours with call centers. So like you call our facility, we are going to pick up. Whereas a lot of the facilities, I would say close to 50% in tertiary markets and probably 30% in secondary markets are some dude's cell phone. He might be fishing. He might be at his granddaughter's recital. He might be hunting. He might be working on a tractor. You never know,
right?
Why? And the reason why I know this is because that's how we find deals. We call those numbers, and like they never pick up, and they call like 4 days later, and you're like, oh yeah, you need a storage unit. I'm like, no, can't remember who you are. Because we called 20 other people.
Right. Wow, that's funny. That's interesting. So it's very localized. Talk about scale. Okay, you had mentioned going back to the beginning, residential real estate. You were doing it. It was fast paced. Huge cash influxes and then outlays as well. But you didn't have a life. You didn't have it was a job essentially. So now that you've been in the space, how many facilities do you guys own and operate? And then how has your quality of life changed?
Yeah, we own 8, and the goal before the market gets so volatile and rates get so high, because essentially a year and a half ago, these sellers are saying that we're being told by brokers they get 4 caps, and now they're getting 6 to 8 caps. So that's just slowed a lot of the transaction volume down.
Yep.
But as far as we want to buy 3 to 4 a year, and when I say 3 to 4, I mean like we want to buy something that has below market rent and expansion room, because that's when the juice gets really good. Like you can take a all-in cost of 1.7 million and sell it for 4.5, and it didn't take you but 12 months to fill up. And so, and as far as lifestyle goes, like there was a time last year where I would mountain bike all day on Monday and all day on Friday. And then I would work Tuesday, Wednesday, Thursday. And then in between there, I'd make sure I have lunch with buddies. So it's just such a small, like there's very little emergencies that you have to deal with. Most of the emergencies, you can get to it within 24 hours. We did have a storage facility catch on fire. So that was little not
save that for our smaller pockets.
I got worse ones for that. It was a grass fire in Oklahoma City that like spread over to our facility. So we lost one building, it was an RV and boat facility. So we lost some very high end boats. Very frustrating and sad situation. So
do you guys have insurance to cover that, or would that be on
that happened March 31st of this year. Like, so it happened like 2 months ago. We're still trying to get our insurance checked.
They were self-insured. I'm just kidding.
No, we're definitely okay. So on the insurance thing, like we over-insure our facilities because in the residential space we had one flood and we didn't have enough insurance and it didn't go well. And so
that's one of those things you always it's never a fun conversation. Like insurance is never fun, but if you've been doing it long enough, it'll pay dividends, especially when you have other people's money that's invested in it, right? I mean,
and that's the reason we over-insure. I never want to call one of my limited partners and be like, unfortunately we lost your money because I was an idiot. That's not the goal. Like I'm the smartest guy in the deal. I'm going to make sure everyone's money is taken care of.
Wasn't worth the $1,500 that saved you in insurance premiums. So.
Yeah. Sorry you lost your 50 grand. I wanted to save $500 a month. No, that's not
doesn't make sense.
Like a good syndicator, a great syndicator is the one that goes, no matter what will happen, you will get your money back if everything goes wrong.
But that's what you build your business on.
That's at a minimum, you get your money back.
That's what you do with the hard money lenders, though, right? A lot of people would have just thrown the towel in, and bankruptcy would have been the easier way to go, and you could have walked from those obligations, but you stuck it out. You did the right thing, and it paid dividends then now that you're into this space.
Yeah, and the main reason I did that, even though it was incredibly challenging and very painful to go through, it was a hard time in my life. It took 28 months to unwind that business.
Wow.
And but the main reason is I knew that if I can get out of this, one, I'll be incredibly sharp from all the stuff I'm learning, and I'll be able to make I'll take all these experience tokens that I've got, and I'll be able to go cash them in on something. And two, like I knew if I just get it out and if I just stayed careful, I could have whatever size business I want. And that was the goal. And that's essentially what's slowly happening now. I'm a little annoyed that we haven't been able to buy any facilities this year, but no one's really buying any facilities this year. So
yeah, dude, it is crazy how the volume is slowed down. So are you guys looking just in Texas?
I like to be able to drive to it. So right now we're looking
just in
Texas, Louisiana, Oklahoma.
Mm-hmm.
There's a few states I would buy in that I would have to fly to, like Florida, Georgia, South Carolina, Tennessee for sure.
Wow.
But the thing is, the further you get out, like what caused the Russian or USSR to fail is the outlier states started rebelling and saying, hey, we don't want you anymore. So the further you get out away from your core, like where you're at and stuff like that, you're slowly increasing your risk, even if you can't even calculate it. So like, man, I didn't know, like the reason why this storage facility does so bad is it's in an industrial park. The broker did a good job of making the pictures look like it was in a residential area, but no one wants to put their stuff right next to
chemical factory.
Yeah.
Right.
I've never had that happen to us, but I've known people who we bought houses thinking they were good deals. You're like, oh, it's right next to a gas station. This is gonna be great. So, so all that to say, to answer your question, we typically want to stay around Texas within a 4 to 5 hour drive for me.
Yeah.
But I'll get in a plane and go look at a deal if I think it's good enough.
Mm-hmm.
All the deals that you guys have bought so far, have you guys been the acquisition piece of that? Have you guys found the deals, acquired them yourselves, and you guys run them in-house?
No, we use a syndication model. So we'll find the deal. We'll raise the 25% down payment. We'll raise a 12-month. At a minimum, we raise 12 months worth of mortgage payments for reserve. And then we raise fees, and we raise the one-time cost of like paying up your insurance, like 12 months worth of insurance up front. So
right.
Awesome.
And then you guys are the asset management piece too?
Yeah, we manage it. We have a call center, and and then like each facility has a fractional facilities manager. So we don't have a full-time manager at any of our facilities except our portfolio of 5 that we have in rural Texas, because some of those people don't even have a way to get a bank account. They pay cash.
Wow.
Yeah. And it's still very much like 1985 there. Like as far as how business is done, people want to do business in front of your face. They don't want to do it on the internet, that sort of thing. Since we bought it, we've gone from 4% internet referrals to like 28. So like most people are getting online and filling out the lease online without talking, but they still have to come in and pay eventually. And so
interesting.
Like the goal would be when we take over a facility, within 6 months, everyone is paying ACH or credit cards.
Mm-hmm.
Yeah.
So, and sometimes it's hard. You can't call them and be like, hey, we need you to, like, you can do it, but it ends up being a catastrophe because they're not going to fill it out. And then they're like, why are you charging me late fees? Well, that's because you didn't fill out the arbitrary thing that I told you to fill out.
Right.
And it's just, it just ends up being a catastrophe. But yeah, 6 months in, that's what the goal is, to have all of our accounts receivable by the first 5 days of the month.
Awesome.
Wow, that's awesome.
All right, we're going to jump into our smaller pockets segment here. So Travis, go ahead, and why don't you tell us one of your worst deals in real estate? What went wrong? And then what did you learn from it, most importantly?
Yeah, I'll give you the Casa Loma story. My 6th deal ever. We were living in Waco. We were from Dallas. I knew a lot of subs from Dallas because that's what the type of job I had up in Dallas. I just knew all the subs. And I was like, I'm going to flip. I was flipping houses here, having trouble finding them. I was making 20, 30 grand a house. So I'm like, this is great. This sell a $180,000 house, make $36,000, 20% margin. That's great. Well, let me do a $900,000 property and I can make 180. And that's all I need to do to live. That's all I need. That's all I need. So I borrowed
What could
money
go wrong?
and got a hard money loan as well.
You got
And
a
we
hard
took
money loan on a $900,000 house?
on a $300,000 house. And then that we were putting
Wow.
450 or putting $250,000 into.
Oh.
So that 250, so we bought at 300K. There was some issues with the city, so we had to wait for like 9 weeks to get permits. Horrid. So there's $18,000 in interest carry right there. And then we put, again, my sixth deal. This isn't stuff we do anymore. So,
Disclaimer. Yeah.
it was supposed to be a $275,000 reno, and it ended up being $450,000.
Whoa.
Like, okay, the market's really hot. We'll sell for 900. Didn't sell for 900. Didn't sell for 850. Didn't sell for 800. Eventually, a buddy of mine who is a broker goes, "Hey, like, please let me. I'm so scared for you. Please let me sell your house."
Wow.
And so we ended up getting it under. We got 3 offers for 715. But as everyone knows, listening here, that's not, you don't net 715. You have to pay realtor fees, title policy fees, back property taxes. I can't remember them. We met, but we lost $228,000 in 14 months of my life.
Oh, wow.
6 deal ever.
So, lesson out there to all the flippers: be
Stay in
careful.
your lane. Yeah, stay in your lane. Just do the boring crap. Just do more than one of them.
You know what? That's super interesting. We, even in the multifamily space, the guys, everybody's got a philosophy, but we've had a lot of people say, you want to make money in real estate? It's in like D class and C class properties.
Ooh, in multifamily?
Yeah. But I think what he was saying now also, it's individual. Never mind.
It's a different market.
It's a different market. But I think the principle is like, you think, like your exposure, you can't quantify your exposure and how that multiplies for a bigger property like that. Like it's singles and doubles. You know what I mean? If you can hit singles and doubles, that's what wins baseball games. You start swinging for the fences and your form breaks down and you're going to pop out, in the outfield type stuff. So I don't know. How would you counsel people, whether it's flipping or maybe an equivalent, real estate investing strategy, kind of that swinging for the fences mentality?
Yeah, you're going to get your ass handed to you eventually, and you're going to learn a big lesson.
Like a $220,000 lesson.
Yeah, and that was the first time I seriously thought about filing bankruptcy. The second time was 2018, right? And so there's a common thread. It's houses. That's why I got out. So, ambition and doing houses, I guess, is not good. So yeah, I would honestly say you can do big things. Big things are easily doable. There's a way that they get done.
Mm-hmm.
And unless you want to learn that, you're going to be taught that by not doing it the right way.
That's good. Yeah, that's really good. That's good. So this would be a great segue into our little nugget segment. So what is one practical takeaway, or it could be a life hack, something tried and true that you operate daily in your business that our listeners can implement?
Can you say that again?
Yeah. So like what's one thing that could be like, it could be a life hack, something very practical, or it could be a tried and true lesson that you like lean on every day at the core of your business that our audience can apply.
I know if my stress level is way out of the norm, like when you go through to 2018 and you get very emotionally aware, because you're like, dang, I just like every time somebody calls me, I yell at them, like, what's going on? So I know like now with everything going on in my, every morning I take, I don't know if it's every morning, but when I'm feeling anxious, I take account of everything I got going on. Like, where are my losses? Do I have any losses? Am I just freaking out about something, or should I just think about this differently? And most of the time, so I just go like, okay, this fund right here, what's it doing? Okay, well, this is what we're doing. We're good here. This facility here, where we're at on that. Well, we're doing pretty good. I just go through the whole like line, and that eliminates anxiety. But if I'm a little stressed out if I'm like being quick or panicky or something like that, then I know something mentally is wrong. And so I just kind of sit back, like, what's going on? And so we had this huge facility in Georgetown we were trying to raise money for, like, right now. And I'm like, you know what? I have that offer from this company. I'm going to take the entitlement offer and wait till life gets a little bit better. The market gets a little bit better before I do this massive $30 million project. I have fun buying the $2 million deals. Like those are fun and exciting. I make plenty of money doing those. And like the back end is also plenty of money. And so I would say like knowing your rhythm, like specifically your heart rhythm and your emotional rhythm. And if that gets out of whack, most things in life aren't worth that getting out of whack. Like I'll go through a stressful event and I'll be like, all right, I'm stressed out, but it's okay because my storage facility caught on fire, that sort of thing. Or I'm stressed out because I'm having trouble raising money. But if it gets to a point where you're like wanting to like bark at your friends or something like that, then something's out of line. Yeah. And I always come back like, well, I'm just gonna take a day off. I'm gonna force a day off and just process it. So
I think what's hard is we kind of lie to ourselves, because anytime you're in business or just even life in general, you're constantly having to grow into something that is new territory, or it demands something more of you than, prior experience. And so you kind of lie to yourself and say, oh, this is just a season. And my wife laughs at me whenever I say that, because she's like, we've been in a season for 8.5 years now. And it's like, when is the season ever over? And I'm like, just a season. So it's hard to be honest with yourself that you're in a prolonged kind of, and it's not really a season, it's a pattern, and you have to do something different.
Yeah, there's definitely like, I'm super stressed out. And then there's I am having to learn a lot to get this deal done. And it's two different, it feels, when you're in it, it feels different. Like you're like, man, this is uncomfortable, getting like embarrassed in front of these engineers and city planners and et cetera, et cetera. But like I'm calm and I'm cool. So therefore it's probably growth as opposed to me just being out of balance mentally. So
what's been one of the greatest resources in your real estate investing career?
Mentors. Mentors, and specifically those mentors that are like 50 plus, that have done a lot. Like, don't take advice from a dude that's your age unless that dude has done 10x what you've done. One of my biggest mentors is a guy out of Dallas that ended up buying my 20 unit Class D apartment when I couldn't figure it out. He bought it, and then we've stayed together. We've partnered on deals, but like, anytime I need some advice, I was like, hey, so how do I structure this, that sort of thing. And same thing with, another mentor of mine is someone who is an investment banker, is very well known, and I have the honor of knowing him personally. And so I'll ask him like, where do you think this is going? What do you think this is going to happen? So I would say mentors really bring a lot of peace to your heart. And then just having like industry mentors, like my friend Fernando, who I call, be like, hey, this is what I'm thinking on this deal. What do you think? He's the one that I met at the mastermind I was talking about earlier.
Oh yeah.
So mentors, people. That's awesome, dude. Yeah, and I think people are always the lifeblood of business, whether it's somebody who is pouring into you or people that you rely on every day to get stuff done, like your fractional manager that oversees, makes those deals possible that otherwise wouldn't. So that's awesome. Hey, lastly, and most importantly, tell us about your company and how can people follow your success?
Yeah. Company is called Balcomie Capital. You can reach us at investinstoragedeals.com. We're a small boutique company that wants to stay small and boutique, maybe not small in volume, but small in size. Like we want to be top level or top light. So our fees are a lot smaller than all the other syndicators. And then the deals that we find, if I'm going to be spending time on them, then they're going to have to be very, very good deals. They're not going to be these little crappy 12 to 15% internal rate of returns. We average 22 to 28% internal rate of returns, and a 34% cash on cash. So
awesome.
Very high returns, primarily because I just don't like wasting my time.
Yeah, no, that makes sense. And just out of curiosity, do you guys structure yours for long-term holds or exit after 3 to 5 years, or how do you guys usually do that on the back end?
My goal is, the way we structure them is for long-term holds, but to get their money back as soon as possible. And so my personal goal is like, how fast can we get them their money back, basically. Right now, it's kind of hard to do that because you're not going to take a 5% interest rate you got in 2021 and refinance to 8.25, 8.75. It's been an interesting, for our generation, this is the first time we were having to deal with. Like,
Yeah.
wait, what?
Right.
Like, interest rates can go up. Like, how do you deal with that?
How do you live with that?
You know the thing that gets me, and we'll close with this. Everybody who's older wants to be like, back in my day, interest rates were 18% in the 70s. And I'm like, yeah, but prices were relatively so much less. And we're getting hit with interest rates and inflated prices. So
Totally.
keep that out of my face.
My granddad paid $14,000 for his house. You know, he's 92.
You can pay 18% interest for a house.
Yeah, like that's
that.
easy. The whole reason now low interest rates have caused an incredible like increase in values, and now like those are going to trickle down.
Yeah.
And the active syndications, it'll be interesting to see how those work out. But I think the smart syndicator will be able to get out of
Yeah.
it somehow.
Well, I applaud
Yeah.
you guys for being selective and not having like there's a term in real estate on the agent side of things for a realtor, we call it commission breath. And it's like you're always like looking for that next commission, and you'll do anything to get that commission. And there's kind of like syndication breath where it's like, hey, is that deal? And you're like, that's not a good deal. You shouldn't do that. But you
really got to structure your deals so that you're making money every month, even if it's only like a $1,500 to $2,000 payment, but something that you can pay. So you're not chasing and selling your limited partners on crap. And so
Yeah,
exactly.
Well, Travis, thank you so much for spending some time and pulling back the curtain on some self-storage stuff for us.
Yeah, man, this is a lot of fun. I enjoy chatting with you guys.
Awesome, dude. Thank you.
Take care.
As always, excited that you joined us on another episode of the Reinvest Podcast. If this episode added to your tool belt or left you feeling inspired, go ahead and share it with a friend. Stay tuned every Tuesday for new episodes. And if you want to get in touch with us, go to our LinkedIn or Facebook profiles and shoot us a message. Move farther, reach higher, and grow deeper. See you next time.